Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Slight gains across most of the ag space here this morning as markets, at least for now, take a little bit of a break from the recent price volatility. Corn is steady to a penny better. Soybeans 2 to 3 higher, and the wheat we're looking steady to 3 better, with strength led there by Chicago futures. Up about $1 a meal, while bean oil is down another 20 to 25 points. Yesterday, the USDA announced another 330,000 tons of beans sold to China, bringing this week's announced sales so far to just over 1.12 million metric tons. Still well below the 2, maybe even up to 3 million metric tons. Traders believe that China has priced, as talk surfaced of another 2 to 3 cargoes yesterday off the Pacific Northwest. Export sales later this morning will be for the week ended October 2nd, so still got a lot of catching up to do there. The CFTC did provide their first commitment of traders update since the federal government reopened for the period ended September 30th. Money managers were pretty healthy sellers across the ag space that week. At that time, there were short 135,000 contracts of corn, 39,000 contracts of soybeans, 118,000 meal, 99,000 Chicago wheat, and 54,000 contracts in Kansas City, and while only long about 1,000 contracts of bean oil. They were, however, long a record amount of lean hogs at 146,000 contracts. Right now, we're thinking that short position in corn has dropped to about 87,000 contracts. That short position in beans has now flipped to long 100,000. Short in meal and Chicago wheat sit at around 70,000 contracts each, and long about 10 to 20,000 in the oil. Chinese census data showed that they imported a record amount of beans in October at 9.5 million metric tons. However, for a second consecutive month, none of these imports were from the U.S. Of these 9.5 million metric tons, 7.1 were from Brazil, 1.6 coming from Argentina. And through the first 10 months of 2025, their total imports sit at 95.7 million metric tons, 71 of those coming from Brazil, only 16.8 million metric tons from the U.S. Look for these totals to begin to shift a little bit now into the year end, with China back in market for U.S. soybeans. Yesterday, Saffras and Mercado, they joined ABOV from lowering their soybean production forecast in Brazil. Both, however, are still just above the USDA record production forecast of 175 million metric tons. The EU officially pushed back their deforestation regulation of the year. This would require commodity importers to prove purchases were not made from crop area that was deforested after 2020. Soybean Global, they forecast about a 4% shift in U.S. corn acres into soybeans in 2026. Wheat acres in U.S. expected to fall 1.3 million to 44 million acres. Most of that drop coming from the winter wheat. Inside trade for D's corn overnight, as we're holding very close to its 50-day moving average. The USDA will update monthly soybean and grain crush data from the month of September tomorrow after the close, with the October data coming on the 10th of October. For now, at least, Jan beans rejected trade below yesterday's low. Prices are hovering near the midpoint of this month's range at 1136. How much U.S. beans China is willing to buy at price levels above what they could source from Brazil will pretty much, I think, determine just how high prices will go after hitting a 17-month high earlier this week. Bean oil still a touch lower, feeling the effects of yesterday's report on wire services that Trump administration is considering holding off another year or two of lowering incentives for imported biofuel or feedstocks used to make biofuels. Inside trade across all 3 classes of wheat. Thanks for listening, everyone. Have a wonderful day.